President Trump, as forceful as ever last night, cast doubt on the whole balloting by mail process, saying that there would be hundreds of thousands, if not millions of votes that would go astray. They would be found in dumpsters, and making baseless accusations about what will happen with mail-in ballots. He also encouraged his supporters to become poll monitors.
I am urging my people. I hope it's going to be a fair election. If it's a fair election, I am 100% on board. But if I see tens of thousands of ballots being manipulated, I can't go along with that. And I'll tell you what,
does that
from
mean,
a common sense,
does that mean you're going to tell your people to take to the street?
It means you have a fraudulent election.
Well, I would have said, what's all this doing to the stock market? And it's weighing on investors' minds. And they seem to be taking this great deal to heart. And then you look at the numbers, as I was talking about with Julia just a moment ago. If we look at them again, the triple stack and the Dow, and you see that the market's rallying it's coming back off its top. And you look at how it's rallied. Again, it's come down on a minor correction. But they're down for the month. But Kristina Hooper's with me, the Chief Global Market Strategist at Invesco in New York. Kristina, I assume you are almost as horrified, or maybe more horrified, as everybody else is about what you witnessed last night. But it begs the question, why isn't the market more concerned about political dysfunction bordering on disaster in this election?
Well, I think the market is concerned about it, and there will be periods of time where we see market swoons, market volatility, particularly as we get closer to the election. The good news is that the stock market got distracted today, though. It stopped thinking about last night and started thinking about, I think, Fed accommodation. We heard from Dallas Fed President Kaplan recently about the likelihood that we should see rates stay very, very low for a number of years. So that certainly was a positive. We got signs that there could be a phase 4 fiscal stimulus deal, which I think was a very positive catalyst for stocks today. And then we also got good news about progress in a therapy that has been shown to treat COVID-19 and lessen the severity of the illness. So all good things that can distract us from the bad.
Right, but I don't wish to deny the significance, for example, of an early vaccine, etc. But the Fed, the Fed being the only game in town merely means that you're just moving the deck chairs on the Titanic for the time being until some real proper growth comes through, solid growth. And on this question of stimulus, of course, it's crucially important. But if you have a paralyzed political elite, possibly until December, January, at what point does investors throw up their hands and say, I'm out of here, I'm going, goodbye?
Well, I think investors recognize that this is going to be a short-term problem. Although the president alluded to the possibility of this going on for years, it's not going to. I think it's going to be decided relatively quickly. And by whatever means, there will be a president on Inauguration Day in January of 2021. So it's a very short-term issue. Yes, that will create jitters. That will create short-term market volatility. But this is not something that is going to last a very long time. So when one has a long time horizon, it really doesn't matter. And I think investors have learned from the global financial crisis, you don't want to abandon stocks because you miss out on rallies. And that can be perhaps the biggest mistake you make in the midst of a crisis.
That is so true. I mean, that is what is propelling everybody to keep waiting on the dip. But I do want to put it into a wider concern, an economic concern. If we look today at the job losses, whether it's the 28,000 from Disney, the tens of thousands that may go in the airline industry, the small businesses that are going to be losing. We're moving into a really interesting time, aren't we? Whereby we're in the trough here. It's slow, the trudgery, jobs going here, jobs going there, trying to rebuild. Will that be reflected, do you think, in the stock market?
I don't think it's going to have a big impact on the stock market just because there has been a real decoupling because of what the Fed has done. The accommodation has been so extraordinary that it really has altered risk and reward profiles, far more so than it did during the global financial crisis. But I think you're right to be concerned about the economy just for the economy's sake. Clearly, there seems to be, signs point to something of a slowing of economic growth this fall. And I expect more layoffs. I don't think that we're going to return to normal until we get a vaccine. But certainly this fall, with the potential for a second wave, and if we don't get adequate fiscal stimulus, it could be problematic and really create some headwinds for this economic recovery.
Kristina, I'm so glad you came on to us and put this into perspective for us today. Thank you very much indeed. We will talk more and frequently between now and the end of the year. I appreciate your time. Thank you.